All right, everybody, welcome to this training. And today I am going to be sharing with you this tax strategy, which is called DAF, Donor Advised Fund, right? And this is really a tool that you can use when you're making charitable donations, right? If you're on the giving side, you give either a little bit or a lot every year, it doesn't matter. But if you know about this thing, then this tax strategy and this tool that you can use to help yourself reduce on taxes, and we're going to talk about tax strategies. But really, what is a donor advised fund, right? And from now on, we're just going to probably refer to it as a DAF. But donor advised fund is basically, think of it this way: it is like a checking account for yourself that you can contribute to and get an immediate tax deduction for charitable donations, right? A donor advised fund is basically your own account that you can manage by you contributing money to give to charitable organization. So for example, let's say you usually give $5,000 a year to charities, but you need to get a big tax break this year and bring down your tax bracket. You can open up a DAF, donor advised fund, put a $50,000 and get an immediate deduction that same year. That is what donor advised fund is. You're a donor and you advise what the money can go to. And the money can go into any 501 approved 501c3 charitable organization. 501c3 is a status given by the IRS to either a church or synagogue or a nonprofit organization to be able to receive charitable donations, and so that you can get a write-off for that. Okay, so that really is what donor advised fund is. Now, donor advised fund, and we're just gonna talk about what it is. Yep, cool. Okay, awesome. So donor advised fund, one thing I forgot to mention is that any money that you put in actually can grow there tax-free, right? So if you put in $5,000, 3 years later, it's $8,000. You get to donate the entire $8,000. The $3,000 that was earned there is tax-free, okay? It's very easy to set up donor advised funds. In fact, they have been increasing lately. The popularity of donor advised funds have been increasing as well. And you can set it up with any financial institution such as Fidelity or Charles Schwab or any other private financial institution. The fees to set it up are very minimal, right? And you have to kind of shop around, see who provides better fees. They do charge you management fees, but it's easy to set it up. Like I said, it's a checking account that you set up that you can now use to put the money in, and that money can be used to give out to charity anytime you want, right? Now, most of these accounts do not have initial contribution limit. Some can go from $1,000 to $25,000, so you have to kind of look around, see which one works for you. But once you have this open, you have this in your back pocket, so to speak, right? Anytime that you need to use this strategy, you can, right? So let's kind of talk about how this works, right? So you open up a donor advised fund in year one, for example, right? Year one, right? And you contribute $50,000 into it. Once you contributed $50,000, you get an immediate tax deduction, okay? You don't have to contribute $50,000 from this donor advised fund to your charitable organizations that you want right away. You can contribute it over the course of 1, 2, 3, 4, 5, 6, or 7 years, however works for you, but you get an immediate tax write-off right here. Now, donor advised fund, it's not controlled by you, meaning to say once you give the money in, done. It's irrevocable. It is controlled by what's called a charitable sponsor, and that could be a Fidelity or a Charles Schwab or any other private organization that does that. But you as a donor, you have a control and say of where you want your money to be directed. But they basically have a control of it, right? They have the ownership of it, I should say. But you have a control of how it can be spent. And like I said, once you put the money in, it is irrevocable. But the benefit number one of it is that you can get an immediate write-off. Donor advised fund, you put in $50,000 today, you get a tax deduction immediately, and you don't have to distribute it all out in year one. Advantage number two of this is that you don't only have to put away cash, donate cash into your donor advised fund. It can also be stocks, it can be partnership interest, it can be property, real estate, whatever that you want, right? So we can just going to write property here. That you can donate, right? And you can get a write-off. What I like about this is that you can donate an appreciated property. For example, let's say you own a stock that you bought for $10,000 and you held the stock for more than 1 year, okay? You held the stock for more than 1 year, 5 years passed, this stock is now worth $70,000. Okay? If you cash out on this, you're going to pay capital gains tax, right? And then if you're going to cash out, pay capital gains tax, but you're going to donate the money, then you're really going to get a wash. And to avoid all of that, and what do you call it? Donate appreciated value. So basically, you're going to put it into donor advice fund. The entire $70,000 will be a write-off, right? The entire $70,000 into the donor advice fund will be a write-off. And now, you've got an appreciated asset that you donated. You got a write-off for this, right? And now the $70,000 can be given out during the course of any other years. Okay, I hope that makes sense. So again, you can donate a property and you can donate cash, right? We said cash. Now, the limitation with cash is that the cash cannot exceed 60% of your adjusted gross income, and property cannot exceed 30% of your adjusted gross income. So if you donated a lot of cash, but it's more than 60% of your adjusted gross income, any excess will just be carried over for the next 5 years. You don't necessarily lose out on it, you do get a carryover for it, okay? But what happens is that you get an immediate deduction. That is what we're really focused on over here, okay? And another strategy that you can use this on, I'm just gonna erase this over here. Another strategy that you can use this on, let's say for example, you donate $5,000 every year, but $5,000 of donations is not enough for you to itemize on your tax return. Because remember, as a married filing joint, and we're just going to use married filing joint as an example, your standard deduction is $25,900. That means IRS says, hey, we're letting you deduct from your taxes $25,900 right off the bat. If you're married, right, the first $25,900 of your income, so to speak, is not taxable, so you get to deduct it as a standard deduction. People that itemize on their tax return, their deductions have to equal more than $25,900. And usually that would include mortgage interest, property taxes, charitable donations, and some minor stuff as well. Now, what happens is that after the passing of the Tax Cuts and Jobs Act in 2017, property taxes, state income taxes, and local income taxes all have been grouped into one at a $10,000 cap deduction, which really reduced the number of people that could itemize. At the same time, the standard deduction rate doubled, right? It used to be 12,000 and change, now it's 25,900. That means less people were incentivized to donate because they were not able to itemize their deductions to get a write-off. Right? I mean, those that wanted to donate still donate, but it has incentivized some people. But how about those people that continue donating? Their personal deductions don't equal more than $25,900. That means they can't write that off. Here's the workaround with a DAF. Let's say you know that every year you contribute, you donate on average $5,000, right? You know yourself that every year you donate $5,000. Well, make a game plan for yourself for the next 5 years. You know you're going to donate $25,000. Why don't you put in $25,000 or whatever it is? If you do $3,000 a year, multiply that by 5 years. I like a 5-year game plan, and put it all in a DAF and get an instant tax deduction, right? And this is assuming that this number will exceed $25,900. You obviously need to speak to your tax advisor and kind of plan for that. But this is another strategy that you can use right now. If you making a little bit donation here, a little bit donation here, a little bit donation here every year, and still it's not enough for you to itemize, well, bunch it all together over the next few years, right? Add that up, take it and put it in the donor advice fund, get an immediate tax deduction write-off and a benefit of bringing down your tax bracket. I hope this makes sense. But yeah, all right, cool. Let's continue with another thing. The last thing I want to talk about here, one of the strategies is that there's obviously a lot of strategies when it comes to selling your business, and we're not going to get into much detail over here, but when you do end up selling your business and you have that cash left over, right, or that cash coming in, and there's one way you can do, again, if you're of course a charitable giver, this really works for the people that really give a lot, or they want to give, or they want to contribute to a good cause. If they haven't given in the past, but they sold the business, they don't know where to give or how to give it, how to make it work, well, Don't think too much. You sold the business, take the money, put that into DAF, and get an immediate tax write-off. Bam. All right, a really, really awesome strategy. So selling your business, you got all that cash coming in, you need to show less income because it's going to put you in a higher bracket. Donor advised fund. Okay, by the way, they're not as complicated to set up like I said earlier, right? Whereas donor advised fund, if you compare it to a foundations, they take up a lot, personal private foundations, a lot of legwork, a lot of administrative. None of this stuff you deal with when you have a donor advised fund. That is dealt with by your charitable sponsor, account that will open for you, such as a Fidelity, Charles Schwab, or whatever accounts they have over there. They will handle the administrative, the bookkeeping, the record keeping, anything that's related, they're going to handle. Of course, they charge minimum fees, whatever those fees might be. You might want to shop around, but definitely check those out as well. Now, another thing that I wanted to mention with the donor advised fund, like I said, they're not complicated to set up, and the initial investment that could differ, right? It could start from $1,000 to 25,000. Again, depending who. You're also not required. There's no law that requires you to distribute money from your donor advised fund every year. We don't have a law like that. It might be that your sponsoring charitable sponsor might say, hey, you need to distribute at least 20% every year, right? But there's no law that says you have to distribute every year. As long as you put the money in there, bam, right? It can stay there. So that's another benefit. I took some notes here. We talked about that. We talked about the distributions and some of the strategies. And yeah, I think we're pretty much covered here. So if you guys have any questions, I'd love to take any questions, whether you're watching us on social media or on Facebook. But if not, other than that, I think this was great. Let me know if you have any questions. Thanks.